Hi, sir.
Morning, Michael.
I'm fine. How are you?
I'm okay.
Okay.
How are you?
I'm fine.
Morning, Michael.
Morning, Paradiso.
So, Vix, can you
I'm
say Vix
fine.
that
How about you?
it's above the zone? Like where it
Yes,
is above that zone, we expect buying opportunities. This is the daily time frame. It broke this resistance. So right now I'm looking forward for if it breaks that zone. I'm looking forward to the next zone here. That is according to the daily time frame. So long we're above this resistance, the buys are safe there. So long we're above this resistance, the buys are what we are identifying on the daily. So long we're above that resistance, we are much more concerned about buying more than selling. So here, even if you use your Fibonacci, you realize that okay, like this, right? This is the Fibonacci. So according to it came and helped around the 50% here, 50% there. Then after the, we are looking forward to the negative 27%, which is our target from the 0%, then 61.8. So it's like 0% is TP1, TP2, then the final TP is negative 100, which is somewhere around the top of the trend line there. So right now we're here. We need to identify more time frames. We need to identify buying opportunities on that zone. Once we get them, like that resistance, that one, just like that.
Okay.
Right. So this is the 4-hour time frame. 4-hour time frame. The market is moving in a bullish market. High lows, higher high, high low, higher high, high low, high high, higher low, high high, higher low. Long this higher low is still there. That is why I say about what? About buying more than selling, because the market structure is bullish. The buying side of things more than selling. This market, we know that it's still bullish. Up until this high low is violated, we know that markets, that's where you also shift your buyers. So long this high low is there for the weeks. We never broken. If you mark these high lows, all the high lows that were there, this is a high low, never broken, never broken. Here, never broken. It actually didn't break it, because so those are simply the market is still bullish. You see it by failure to is maintained. We know that we are still having a bullish bias for which is the 4-hour or the daily. Up until it's broken, that's when we're going to shift our bullish. Our bias is still bullish. So this high here, this previous high, we're expecting it, nature that has been moving, they are broken. Check all the high lows as we're going up. High here, high here, broken, high here, broken. So same as this one, I'm anticipating it to be broken. Once that higher high, the previous high there, targeting the zone, first zone there. Once that first zone is, and finally this zone at the top, what we are seeing on the 4-hour. 1 hour. 1 hour. This is 1 hour time frame. We actually can see that we are having something like a. Let me see if I can draw this properly. Can you see this? Right. So this is something like what we call an ascending triangle. An ascending triangle is whereby you have high lows moving into the same resistance, which is also same highs, lows. We have a low here, high low here, and high low here. That is what is that are moving into the same sense. So right now, my anticipation right now is if ever this high low is going to break this resistance, give us a retest maybe somewhere here, and continue. If ever that high low is going to hold, just to give us such a a scenario like that. Just to give us such a scenario like that. But meanwhile, if we break out to the downside, if we fully break out to the downside and get a retest, one can actually take sales. Those sales you're targeting on 4 hours. So long as ILO is maintained, price will still continue to play around it. You take sell positions based on the break and the retest of that zone. That means it's a higher low on the 4 hour that has been broken. And once that has been broken, it's now a shift now. The market structure has shifted from being bullish to being bearish. Do you understand? Good. So either we're going to have this, either we're going to have that thing, or we're going to have this as well. It's going to hold, or this one whereby we started here, first touch, second touch. So meaning, first you buy above the break of this resistance. Once you break this resistance, that's last break of this one as well. Wait for this break here. This one, something like this. For safe sells, wait for something like this. Break, go, then continue to happen. So for buys, wait for the break of this resistance, the VIX. You understand?
Mm.
Right, so that is what we are looking at on the VIX. That is what we are looking at on the VIX. So the other thing now, if you remember what we spoke about on the weekly and the monthly time frame, like on the weekly and the monthly time frame, you realize that we spoke about the structure that is there. That is smaller time frames. It can have an impact on these smaller time frames. Like of that, our targets and everything are always going to be the previous size, because it can come, it's fine. Then if it comes there, it's also okay. Why? Because that we are having a double top. That double top was formed and we retested. We are on the retest so far on the monthly. So according to the nature of the double top, just a continuation down. So you realize that according to the monthly and the weekly, the sellers are very much might be seeing some form of confusion, whatever, the market failing to really, and that has been happening on VIX ever since it broke outside of this clear. This was a clear move. But this one now, this whole sketch move, a majority of people, because they don't know what is happening now. Those are moments whereby people who are not aware of what they're doing, they simply take unnecessary losses there because you don't know what you're doing there. So rather wait for the market confusion zone. I call it a confusion zone, or one can call it a consolidation, but it's an upward move. A consolidating upward move is different from this one. This one, we can't call it an inside. You could see that the momentum is there now. This scenario now is different because it's struggling, really struggling. That is why you need to wait for the break, either to the downside, or also this channel, something like this, comes back to retest the channel, then maybe go. This is a much more clearer to go that way. That is a much more. So I would love it to come out of this confusion zone. Once it comes out of that zone, outside of that zone, they are much more safe than anything else. So right now we are waiting now. Let's wait for the market to come out of this zone. Let's wait for the market to come out of this zone. Any questions?
For V75 because I'm not in.
What?
I said I don't have any question for V75 because
Okay.
I'm not in.
Okay. So I hope it's clear. I hope the setup is clear. We are still having that bullish. No, that momentum that we saw on the monthly and the weekly. Just in case weekly time frame momentum does its thing and right. What one can do, remember I spoke about it as a higher low as well on the daily and the 4 hour. Once you see it being broken, you see the market doing this and coming back to this zone, take your sales from that retest there. That break, you can take even the retest as well, you can take. Why? Because number one, it means the momentum on the higher time frame it will have won. Number two, you also have a similar structure. The similar structure weekly, you realize that on the small time frames, the market will have also established that's a leg, top, neckline. Then here, maybe it fails to come to this area and give us a top. This will also be a top, double top, neckline. Once we break the neckline, retest, then continue all the way to the right leg. Can you see?
Yes.
So safest sells, you can actually take sells targeting this zone. Once it breaks this zone, hold for long. You can even hold them past this level here. But so far, above this daily resistance, the bias is still bullish. So long we're above that resistance, we are still having a bullish bias up until it brings to say, now our focus is now on the selling side of things. But meanwhile we're looking at buys. Meanwhile, we are looking at buys. So if it breaks that resistance on the 30-minute, which is something like an ascending triangle that I showed, if it's an ascending triangle, you realize that it would have actually of this bottom trend line and that top rest or something like this. All those trend lines, they are viable, they are relevant. This one as well. Right, so that is it for VIX. Anything else that you want to see?
Yeah.
Any other instrument that you want to see? Which one?
C5 and B5.
Okay, C5. 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 This is C5. Let me remove everything. All right, C5. Can you see that the market is bullish according to the daily? Market is bullish. The market, because we're forming high highs, high lows, high low, high low, high low, high low. So right now, this is our high low. According to the nature of the market, we're expecting to come and break this high. That's why maybe it can start to reverse to the downside. So that target that I marked, that swing high that I marked, it's actually a target that one can actually look at and also utilize for the targets of the buys. So after having seen that we are in a bullish market, what one can do, obviously, so the other key level that I mark obviously is this high low. So long that one is not broken, the market will still continue being bullish. Look at all these high lows, they're never broken, never broken, never broken, never broken, never broken. It's still what? Bullish. Same as this one. This was simply a confirmation to tell you that we are still bullish. The only areas that have to be broken are the higher highs. Higher high has to be broken, must be broken. This one as well must be broken. Can you see? Right. So already you're seeing that you have a level that you're expecting the market to respect and a level that is higher, because the probability, according to the nature, the way it has been moving, the probability may be that target there before maybe reversing to the downside. The probability is high. So dropping somewhere close to this previous continued going down. It's actually something that Cash 500 likes. If we're going down, if we're downtrending, then we begin to go up. Are these previous swing highs, these ones where it's, if ever we're going to get a reversal to the downside, we look at those levels. See, we're going down, it started to go down from here. This was up, then the down, we can say it started there, right? Somehow, this market to go and test that level before maybe continuing to go down. Do you understand?
Yes.
Yes. So we have that target there because of what I've just explained now. So these two areas, this higher low of the daily and the higher high, those are two important areas. This swing, this latest swing high on the daily. So once you have those three levels, you're good enough to actually make a decision just by having those three areas of significance. I don't need so many lines here at the bottom, because remember, when we're on the higher time frame, it will take something like weeks for it to even be. They are significant because the market is in between. So this is the range. If ever this range is not up until that range is broken, either to the upside or the downside. So meaning those are the only two major levels that you must be having so far right now on your chart for Cash 500. Two major levels, this one and this one. If not your to break that range. So this is your range that you're looking at. This is your range that you're looking at for C5 per hour. You can actually see that the bullish market structure is still there. Higher high, higher low, higher high, higher low, higher high. So according to the 4-hour, we can also mark this level here. Why mark the probability of the market coming to that one is high? Same as you can also mark the higher low. Either we mark this level there, right, like that. The probability of the market buying is high. Once this higher low is broken, that's when you see the market reversing. If you see it coming here, fail to break higher, break this higher low. One may be a reversal. But so long that does not happen, you know that the probability of us having a bullish continuation market is so past 2 weeks, if not the past month. C5 has been buying. So whenever you are taking your positions, it's always wise to take your positions in line with the major flow of the market. It's always wise to take your positions on C5. It's bullish. It's on the line here. I put a counter trend line here. I know that I can even take buying positions upon the retest today. I can even take buys. My first target is this daily recent high. Once that one is broken, we have. So one can actually take this buy position piece first time frame. You realize that the momentum and the flow of C5 is to the what? Is to the buying side of things.
Okay.
So it had the buy for C5. If ever you're not in already, this trend line can actually guide you. Can actually take. So going down to lower time frames, 30 minutes and 15 minutes, you're only going there to, for example, already on 30 minutes, it has been broken, right? What I would always love is more. Wait for something like this, then you buy there. Then we go. Once we break there, we're looking forward to the next zone, C5. The overall market is still bullish according to what we've reached, that peak or that highest swing high according to the daily. Maybe it's because of that. Wait for something like this, then you buy from there. There you actually get a beautiful buy. Once you has your target, once it breaks that high, once it breaks that level, once it breaks this level, you know that most probably you are going to this other level. Once we break that one, which is a daily level, this one. Once we break that level that we saw on the daily. But so far, this is our target looking at for C5. So don't expect any sales there. Don't expect any sales when we're above for your buys or your sells. Above this trend line, you know that you must be buying. Below this trend line, it was understandable. In as much as you would be trading against the flow of the market, but it was now C5, we are bullish. The market is still bullish. The market is still a bullish market. So just a pullback like that, that's a very, very safe buy because you're trading in line with the major trend and the major flow. You see, I like already what it is doing. So once you get that full pullback, so right now it just closed above the zone. If it closes above our zone, we'll take our buys, then go up with it. Makes sense?
Yeah.
Right. I think so. That is it for C5. Daily, based on the breakdown that we did from the daily. Our bias for C and the rejection above we buy. The other targets is that daily level that we marked. So far, these are the trend line. Our buys ourselves. 3-minute candle. It still has 24 minutes to close, to reject and close above. So once you get that rejection and close up for the 30, once this candle rejects and if it closes below this zone, right, you don't take sales because it is, so you wait for this other. We have this trend line, first touch, second touch, with this trend line here. This trend line will guide you for sell entries. Once you sell positions, once you see this trend line, this one being broken, as well as this take sell positions. So long we are above this zone, no sell positions. Do you understand?
Yes.
So I hope C5 is clear as well as VIX 75.
Yeah, sure.
Okay.
Right. So once we get, I'm actually expecting that rejection because everything right now is pointing to the buy side of things. From the daily, the market structure is bullish and the market is coming from a higher low and it's moving towards the higher high, right? Those are confluences that you're looking at. If you check the moving average on the daily, it's below, same as here on the 30 minutes, which is the lower time frame, it's also below, meaning the daily and the 30 minute already, and the higher time frame and the lower time frame already, they are having the same structures. They are all saying yes. they're all saying yes to the buying side of it. So when the higher time frame and the lower time frame are in agreement, those are high probability trades. Trades where you find the higher time frame being in agreement with your lower time frame. Those are high probability trades.
Yes, sir.
Do you understand?
Yes, 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 yes.
Yes. So that is it for C5.